Hello and welcome, dear crypto friends, to this exciting day in the crypto market. Why is it exciting? Because today the consumer price index has been released and it has a big influence on Bitcoin and the crypto market. Now, why would that be? Let us try to understand why the CPI data has such a big impact on Bitcoin and the crypto market and how this all works. Okay, so the consumer price index was released today at 8:30 in the morning Eastern time, good old US of A time. And what do we see, friends? Oh shit! 8.6% year-over-year inflation as compared to May 2021. That is really high, friends. That is higher than the market anticipated, because 8.3% were anticipated, and it is even higher than April, which is really not nice. Now, why is it not nice, you might ask? But I thought high inflation is good for coins, right? High inflation is good for crypto, because then everybody thinks, oh, the dollar is being devalued, I have to save my money and run into crypto. Yes, that would be the logical thing, but unfortunately the markets are not logical, and we do not live in a logical world, and the markets are highly irrational. So let us understand what is happening. So we can see that today Bitcoin is down. We zoom into Bitcoin and of course it has started already going down. Why is that? Because the release of this consumer price data has made the dollar pump. So the dollar has reached a peak in May 2022 on the 13th of May at 105, which is a 20-year high. The dollar hasn't been so high since 20 years, friends. Let us go into the weekly chart. It is insane. The last time the dollar has been so high was here in December 2002. Okay, so the dollar is pumping like a maniac. It has been on a parabolic run since December 2020. It's just going parabolic and is not wanting to stop. Now the consumer price index has been released today, and of course the consumer price being so high, you would think, hey, that is bad news for the dollar, right? Inflation is super high, the dollar should dump. But wait, the market is driven by emotion and driven by expectation of what the Federal Reserve is going to do. So if the CPI data is very high, we know that the Fed, they said, if inflation is very high, they will continue raising interest rates aggressively. So they will be even more hawkish, meaning they will raise interest rates even more aggressively than we anticipated. And what happens if the Fed raises interest rates more aggressively than we anticipated? That is right, friends. That means they are tightening. That means in turn the dollar is getting more valuable because less money is printed and the Fed is increasing the interest rate. If we load the Fed funds rate also into this chart here, we see that the Fed funds rate has actually started rising not so long after the dollar has started going on this insane bull run. Now, why could that be? Well, because they announced already here, like, guys, we are going to tighten because inflation is insanely high. So now they announced that they are going to tighten, and indeed we see that they are tightening like crazy. We are already at 0.77 Fed funds rate. So that means the dollar is pumping, and now because the CPI data is higher than everybody thought, which was released today, that means of course everybody is expecting the Fed to tighten even more. So everybody is expecting the Fed funds rate that we see here in orange to go higher and higher, so that it will pump even more. And the Fed has announced that it will keep tightening as long as inflation is very high. So that is why the CPI data that was released today is actually really bad for stocks, really bad for the crypto market. That means of course that the dollar index will go up, so the dollar is getting more valuable, so everyone is fleeing from risk assets, selling their risk assets, and is flocking into the dollar because everyone then expects the Fed to tighten and the dollar to increase in value. And that is why it's so counterintuitive. That is so strange and so counterintuitive that okay, the inflation is high, so let us all flock into fiat currency. which is just, of course, not really logical, but that is how the market works. And this is, of course, really, really bad for crypto, friends. I mean, this is not good for crypto. We load the Bitcoin chart also here with the dollar index, right? Let us load them both. Let us bring them both into one chart. And I mean, we can see pretty nicely how anti-correlated the dollar index and Bitcoin actually are. I mean, it's hilarious how anti-correlated they are, right? We can see here the dollar index is down, Bitcoin is up, right? Here in March 2020, it's of course even more hilarious. Dollar pumps like crazy, Bitcoin down like crazy, right? Also quite visible here. Dollar index down, Bitcoin up. And now, since the dollar index started going on a rampage, that is coincidentally also the time when Bitcoin started going down. So unfortunately, now that the dollar is pumping, we see here the dollar has reached its absolute peak, right? And this was also exactly the time when Bitcoin started going on this last dump that brought us down to the 30,000 area. So now, because the inflation for May is so much higher than many even expected at 8.6% year over year, this means everyone is expecting the Fed to tighten, and this means the dollar index could, if we are unlucky, continue to pump. And if the dollar index continues to pump now, this would certainly mean that Bitcoin would go down. Now, currently, the dollar is sitting exactly at the 0.702 Fibonacci retracement level. It looked as if it was breaking down and going to the 0.786, but it is now currently resting at the 0.702. But I can tell you this, friends, if we go to the 0.702 level, this is normally the level where retracements happen. So between the 0.702 and the 0.706 Fibonacci levels, that is the area where retracement happen. If the dollar index will just go through this level, through the 0.702 and through the 0.706, friends, this is really bad news, because then it will continue going even higher. The dollar index will just pump to new highs, and this in turn means that Bitcoin will see lows, pretty brutal lows. Let's go to the Bitcoin chart and see what this would mean for our disappointing friend Bitcoin. Now, Bitcoin, of course, if the dollar would pump now like a crazy maniac, that of course would mean that Bitcoin will go down. And if we look at our long-term logarithmic channel that we are always using on this channel here, if we look at our long-term logarithmic channel, let me just go into the weekly chart. This would mean, friends, that worst case, we can see the lower end of this logarithmic regression channel. The green band here has always been respected. It has been multiple times visited here, 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 and here, right? And so we can say that the lowest it could go now, like super worst case, like the dollar pumps like crazy now, that means that we, friends, would go down to this lower area here. And this would also coincide to a long-term weekly moving average of 290 weeks, because this is exactly what was hit in the March 2020 low. The weekly moving average 290 was hit perfectly in the March 2020 low. So if Bitcoin would now continue dropping, dollar index would now continue pumping because of continued high inflation, because of continued tightening of the Fed. That is, of course, really bad news for all risk assets. The stock market will continue declining. The Nasdaq, Dow Jones, SP 500, they will all continue declining. And in turn, Bitcoin will also go down lower. Now, is this super bad news? Does this mean the cycle is now over and we have to wait for, I don't know, 5 years? No, friends, of course not, because inflation will come down again, and the next halving of Bitcoin is also not too far away. So I think worst case, we revisit now this MA 290 at around 17 to 18K, get a nice rebound. We might stay flat for a while, worst case, and then in 2024 at the latest, and remember, this is a worst case scenario, we will continue pumping and go to new all-time highs, because that is just the way Bitcoin operates. Bitcoin is always going into new bull runs here. Every time you think it looks super bad, but Bitcoin just comes up again on top and goes into a new bull run. And consequently also, of course, this means that coins will pump like crazy, and the next crypto bull market, where everything, like every stupid coin, is pumping like crazy, is not far away. If the worst case scenario happens, we should load up on coins, buy cheap coins, build up a nice good portfolio of Bitcoin, Ethereum, and quite a few altcoins, quite a few different ones, because you know, you cannot foresee the behavior of altcoins. Some pump more than others. In every cycle they behave differently. You cannot foresee them. There are a lot of black swan events, Terra Luna, SEC suing Ripple, a lot of black swan events. So we can load up on cheap coins, but we should load up on many different cheap coins if this worst case scenario happens. That was the explanation why the CPI data released today was really not so good news for the crypto markets. But do not despair, friends, do not despair, because better times are always coming. You know how it works with crypto. The good times are always coming sooner or later. It's just a matter of time. If you found this video interesting or helpful, please like and subscribe. I would be happy to welcome you in this small but growing funny little channel here. I will try to do daily updates on the crypto market. Really, I will do my best to do daily updates. We will look at Bitcoin, at altcoins. We will look at the correlation of Bitcoin with all other asset classes and try to understand why Bitcoin is falling or rising. We will try to always understand Bitcoin and the crypto market on a fundamental level. Thanks for watching, friends. Have a nice day and see you in the next update video tomorrow. Tschüss!